I sold below the second consecutive bear bar. We had a weak rally up after a gap up above yesterday's high, in this case, Friday's high. So it was a weak rally. We got a first signal. I was looking for a second entry sell, but we didn't get it. Instead, we got a second consecutive bear bar. It didn't close on its low, but still two consecutive bear bars, so I thought it would be worth it to take a chance for a swing down to yesterday's high, betting that the gap would fill. So I have an order to take off 3 shares at 20 cents and the other 2 shares at yesterday's high. It's small size, first trade of the day. And usually I only take second entries, but today I'm trading based on the context that we should close the gap with yesterday's high. So I don't usually take those kinds of trades, but I would like to start. So I took the first entry based on the context, and I'll see if it works out. Normally I would take a second entry sell regardless of context. If it's a gap up at the high of a trading range and we get a second entry sell, I would take it. But I never take first entries, and I think sometimes it's okay if the context is good. And so I'm trying to work on getting the context right to see if these first entries make sense, and waiting for a little bit of confirmation. Like instead of taking the sell below bar 4, I take it below bar 5 if it's a consecutive bear bar. So I'm trying to do that more. Ended up just getting out there. When this bar closed, we were so close to yesterday's high that I wanted to give it a chance, but it was also a bigger bar, so potential climax bar, and then started to reverse up strongly. Almost reversed up the entire bar, so I just exited at the market. I was thinking of getting out at the close because it was a bigger bar, but we were so close to yesterday's high that I just thought I should give it a little bit more room. But then when we started to reverse up, I just exited. So 5 shares finished with about 20 cents, so $1. With full size, that would have been a pretty good trade, but I couldn't take full size with a trade like this that I normally don't take. But it would have been a pretty good trade had it been full size. But I'm happy with the decision to take it. I think it was a decent read and a decent attempt at a test of yesterday's high. So decent trade, not a significant profit, but I think it was a reasonable thing to do. If this closes as a bull body, I think it's a reasonable buy to close for 10 cents, betting that we get a small second leg up. I ended up getting a worse fill than I wanted. The close is at 94, 93. I got filled at 97 because when I hit buy, a notice popped up. And I get those often. I didn't know what it said. I just canceled it right away. But by the time my order filled, it was already 4 cents above the close. So now my order is 10 cents above my entry, but it's 14 cents above the close. So I'm not sure if that's going to affect the trade. So we're at 388.04, which would have filled my actual target, 10 cents above. Now I'm looking for a little bit more based on my fill. I'm not sure if I should be doing that. I ended up moving my target down to 388.04 because I didn't want to go for too much. I think the setup is 10 cents or a scalp above the bull close if we do get follow through, and I didn't want to base the trade on my fill, so I ended up getting out with I think 7 cents. So 7 cents on 25 shares. So $1.80. Would have been $2.50 if I got the full 10 cents, but so I had $2.80 now. We've had 2 legs down here, and then from this breakout we also had a second leg down. So looks like a 2-legged pullback. I was hoping for a second entry buy, but now we have 3 consecutive bull bars. So I'm gonna buy with half size, which is 40 shares in this case, because it's gonna risk about $12. And if I get stopped out and get a second reversal, then I'll buy above that. So I'm long 40 shares at 338.04 and stop below here. Something I need to work on is something that I've noticed that I'm very uncertain about is if I am waiting for a second entry, what criteria do I need to use to decide that we no longer need a second entry and the current move is strong enough to enter. So for example, this trade is a good example of that. Um, that I'm waiting for a second entry buy because we have a 5 bar bear micro channel, and it is 2 legs down, but it's still a micro channel and not much buying pressure. And so I'm waiting for a second entry here. But at this point, we have 3 bull bars closing near their highs. So is that enough to make me believe that we don't need a second entry and that it's a valid breakout, or do I need one big bull bar? So that, like, right now I'm thinking these 3 bull bars are enough, but because they're 3 medium-sized bars and 2 of them closing on their highs, so I think it's reasonable, but I don't know if it is. So maybe I should be waiting for a stronger bull bar up. So just those kinds of small details about when to give up on the premise of, or when to give up on the second entry and start to be okay with buying a little bit higher after a first entry. So in this case, I bought here. I need to become more comfortable with that, because right now I'm still uncertain, which is why I'm trading half size. Whereas if I'm more certain of it, I can trade full size on it. Another important skill I have to work on is to be able to read this correctly, to know when to be disappointed enough to exit break even. A lot of my break even exits are based on fear. Just, I'm not happy that I didn't go up right away and I don't want to lose money, instead of seeing the bar for what it is and realizing what both the bulls and bears are thinking because of that bar, and saying, if this is a big enough breakout bar, that most people will be happy to exit, versus what I do, which is, that's a bar that I don't like, so I want to exit. I think that's an important distinction, and I think I'm driven mainly by, it went against me, so I want to exit, instead of thinking there's a very reasonable target a little bit higher. It's probably not enough to disappoint all the bulls here, and make a rational decision of when to exit break even and when to stay in. That's another skill, like seeing this bar. Is that enough to make me exit break even after 4 bars without a bear body and a decent context, 2 legs down? It might not even give me that chance, but if it did give me the chance, I wouldn't know what the best thing to do is. I moved my order. I placed a limit order to exit at the bottom of this bar, thinking that it's a bad sell signal after 3 bull bars. So if we do bounce, whether or not we get the breakout, I think it's a reasonable area to test. So whether we go up or down, I think we could bounce up and test the low of that sell signal because it's a bad sell. So it'll allow me to get out with a 5 or 6 cent loss. And I still don't know the 2 things I mentioned earlier, if this is okay to buy after a first signal because of the 3 bull bars. And I also don't know if this is disappointing enough to exit break even or try to exit with a small loss. But when I'm uncertain, I want to err on the side of caution and take a smaller loss, even if this does end up breaking out and it ends up being a double bottom with a higher low. I'd rather take the small loss than consistently let my stop get hit. So if I get stopped out, I'll lose $12. But if I take the small loss here, I'll lose 2. So I think it's worth it to take that smaller loss if I can get that opportunity. If this bar closes on its high, it's a buy signal, but after 3 bear bars. So I don't know. See, this is a situation where I'm not sure if I now exit for a small loss, or if this is enough to stay in. I exited 20 shares at a 20 cent loss, so I took a $4 loss on half my shares just to mitigate the risk a little bit in case it didn't get back up there, and I'll leave the other 20 at that target, which is the low of this bad sell signal. Okay, so I did end up getting filled on that order. I moved it down a cent or two, so just to ensure I got filled, which means I could have avoided this, the risk mitigation exit. But again, it just goes with take a small loss when you can, and I might go a little bit too extreme on it and take losses when they're not necessary to take. But I really need to, like, every single phase, what has held me back or what has hurt me the most is one or two avoidable really big losses, where if I was just very, very aggressive with the exit, I could have avoided it. And so I want to make sure that I don't let that happen anymore. And if I'm going to be aggressive with the exit, it's going to mean that I'm going to exit some trades a bit too early, and when there's a chance of profit, I'm going to lose out on that potential profit because I'm being aggressive on my way out. But it's also going to mean that I'm going to decrease the amount of times that I take those big losses. And even if they're just a little bit smaller, they don't have to be completely eradicated, but just making them happen less often and making them less severe, I think will really help me, because for the last 35 trades or so, I've been trying to make back that big loss of $40. Had I avoided that, and I'm almost there, I'm like $5 away, maybe after today, so I'm down $3. So after today, if I don't take any more trades, I'm probably down $7. So if I hadn't taken that massive loss, I might be up $25, and that can really change the way I trade, my confidence, and obviously my P&L. So I just need to be better at avoiding those losses, or at least making them smaller. And that's gonna mean that I'm gonna leave some money on the table in terms of profits, but that's got to be my priority. So I was up 280, now down 319. So I lost about $6 on that trade. But the potential profit, if it did work out, was a test of the high close and maybe a swing up. So I could have made $20. I lost 6. So I think that's worth it. I just still don't know those things that I mentioned earlier. Was this an okay entry without that solid foundation of a second entry? That I don't know. I'm going to try again, buying above this second consecutive bull bar, closing on its high. It's a triangle. It's also a double bottom higher low. So we're holding at a higher low with two bottoms. It didn't quite get there, but context is good for a test of the high close. So that might be the second entry I was waiting for. I didn't think this was good enough because of the 3 bear bars, but then we started to break out with two decent bull bars, so I thought it was okay. It still is a triangle technically, so if we fail at a lower high here, that would be a double top. So then we'd have a higher low double bottom and a lower high double top. And so in that case, I'd have to exit. I have an order to exit at the high close, thinking that we may pull back there for trap traders to get out. I don't know if I should exit. Right now I have my full position. I have an order to exit my full position there. I don't know if I should exit full or half and leave the other half for a swing. I just don't know what swing targets we have above. The main one is all-time high, but that's at 339.08 for the SPY, and that's pretty far away. So I don't know if we get there without a significant pullback. So I'm not sure if I should leave anything for that swing. Seems like we're stalling at this lower high. If we get a bear signal, I'll exit below. We got a perfect doji there. I exited half. I wanted to see it break through and close above this lower high. If it was a bear signal bar, I would have exited below my full position. But it was a doji, but still stalling at the lower high, so I exited half at 10 cents. Or a little bit over 10 cents. And looking for the other half at the high close. I think that's enough of a magnet that we should get there. And we don't really have that much selling pressure. So I think we should get there. But I just didn't like that it stalled at the lower high. But that being said, it is a 7-bar bull microchannel. And 6 of the last 7 bars are bull bars. So I don't think there's not much risk of it dropping very much. I'm gonna move my stop to break even. It's enough of a rally that I don't know if we go down here without a second entry sell, but I also don't want it to just drift down and get consecutive bear bars and force me to stop out down here. So it's holding here for now, and if it holds here and creates a high one and gets the breakout to the high close, then I'll exit at the high close. But if we can't get more buying pressure and just go back to my entry, I'll just exit. I exited another 10 shares there, so out 30 shares with an average of 10 cents. So up $3 regardless of what happens. If I stop out of these shares, I'll still be up $3. It just started going in a tight range, not getting good buy signal bars, and just really slowed down. So it hasn't really moved much for the last 20 minutes. So I still have 10 shares, target for 10 shares up at the high close. I still think that's more likely than the downside, but we are at a lower high, so we have a double top lower high and a failed breakout of a triangle. So if we do get a second entry sell, that's an exit. But if we don't get that, then I think the odds are that we get to the high close. Now, I don't know if we get to the high close before we stop me out break even, but I think the odds are that we get to the high close before starting a move to the downside. Just got stopped out break even on 10 shares. So decent trade, $4, but if it worked out as planned, it could have been closer to $12 or $15. So looking at how the whole pattern materialized today, it looks like my first entry was okay with the correct stop. And in this scenario, taking a smaller loss actually put me back $6 because I took a $6 loss exiting the way I did. So if I didn't exit and just held through the whole thing, I would be up $6.61 instead of, actually no, that's not true. I would be up $6.61. I would have made $8, around $6. Yeah, so that it is probably right, $6. But instead, I'm only up 60 cents because I took a $6 loss the first time on the first entry, and then re-entered and made $4. So it looks like taking the small loss wasn't worth it today. But I would be saying the opposite if it ended up stopping me out. It's only because it worked out that I'm looking at it as a loss. Whereas if it stopped me out, I would be looking at it as money saved. So I'll still need more reps of this to get a sense of if it's the right thing to do, but I just know that I want to minimize my losses. And because today wasn't a loss, it seems like something that I regret, but over time, I think that's the right decision for me to mitigate those losses. I bought above this bull signal bar. We have a double top bear flag, second leg down, so one pullback, two. I still think the high close is a reasonable target. We went sideways for a while, for about an hour, and then we got this bull signal bar for a second entry buy, so I thought it was worth it to take. It's coming after two bear bars, but not very strong. And the risk is the stop is pretty close because I'm treating it as a high two, so I usually put my stop below the second entry. So I think it's a reasonable buy, looking for a test of the high close. Doesn't look like it's working very well right now, but I think it's a reasonable entry. I put a limit order 2 cents below my entry to get out approximately break even. I don't like this bear signal that we got after the bull bar. So if we can get up there, I'd like to get out approximately break even. Just got out there with a 2 cent loss on 50 shares, so lost $1, down 40 cents now. I may be a little bit too fixated on the high close, but I do think it's a reasonable target. And I do think that even if the high close wasn't there, I think that these are reasonable entries. And this one I'm less certain of because it is a double top lower high right now, and we're in a tight range drifting downwards. So less certain about this. This one was probably mainly based on the high close, getting a test up to the high close. But I think they're all reasonable entries. If this bar closes on or near its low, I'd be willing to sell below it. I sold this close. I'm now second guessing and thinking that I may have been a little bit impulsive and didn't think it through properly, just because I think it is potentially a give up bar because we have a double top lower high here. So we have a lower double top bear flag here and then an overall double top lower high, and bulls potentially giving up on the idea of testing the high close. And so it is a give up bar, but it's in a trading range and it's low in a trading range. And so these bars are often bought as a buy the close bar and not a sell the close bar. So I'm thinking I was looking at the overall context, but not taking into account the fact that it is a trading range. And so we're getting close to the lower third of the range, and maybe it's more buy the close than sell the close. So I'm not exactly sure if it's the right thing to do, but I'm short here. I'm thinking it might be a short, but maybe it's a short higher after we test this low. So I'm not 100% sure, but we'll see what happens. I'm short 60 shares, looking for a 10-cent scalp. So just a test of these lows. So it was bulls who bought this close. It did go high enough for a scalp. It did get up to this low. So that was a better sell, I think, than what I did. I mean, I don't know if that's a good sell up here, but it clearly is better than what I did because I'd have a better price. And it looks like bulls bought these closes. So I think a bad trade on my part for this one. I was thinking that even if we did go up for a scalp for the buy the close bulls, that it was a strong enough breakdown that we should get at least a little bit more down. So I thought it was still a short. It's just about the location of my short. But now I'm not even certain about that because of the trading range. I'm going to try to get out at the low close. I don't think this is good enough for the bulls to get a rally out of, so I think they'll probably still need a micro double bottom. Actually, just going to look to try to get break even, not go for the low close. Okay, so got out break even, and that means that bears who sold this low, it was profitable for a scalp. Bulls who bought this close, it was profitable for a scalp. It was just me selling this close down here that wasn't profitable so far. So I was in between both entries. I should have looked to sell higher or buy lower, and I was just in the middle and wasn't able to do anything with it. So I had a feeling as soon as I pressed sell, I had a feeling that I was selling a little bit too low from this low. If it's a trading range, it should get back up there. And I also thought many bulls would buy the close, this or this, and so I should look to sell 10 cents higher. But I only thought about that after I took the trade, and I thought even if it goes up, we should probably get a micro double bottom, so I'd have a chance to make a scalp. But yeah, so I don't think I traded that well.